Welcome to episode 225 of the podcast. On this episode, we caught up with one of my favorite guests, Simon Rolland. In this episode, Simon shares his journey about buying an existing business and transforming it into a boutique, modern, private lending firm. We also talk about the mistakes people often make when buying pre-established businesses, the struggle of trying to find the right name, and the goals that we both have for the future. Thank you to Rosefern Homes for sponsoring this episode. Let's get into it.
Welcome back, Simon. Third time lucky. Great to have you. Man, I always enjoy talking to you, even before recording here. It's always just such a good energy. So thank you for being here. I really do appreciate it.
I enjoy coming down, enjoy being on the podcast, and I also enjoy the chat, so happy to do it.
Yeah, I remember last time we sat down, it was just after Momentum 2025.
That's right.
Yeah, you weren't at all hungover, right?
I actually can't believe how good that podcast went, because how hungover I was. Yeah, that was lucky. Yeah, that lucky it came off so good.
Yeah, no, that's really cool. So you've got a new brand?
Yeah. So I can run you through the journey. Might be of interest to people, might not. You know, a lot of people, especially our age, are kind of trying to buy boring boomer businesses. And that's what I did last year, right? I don't like to say boomer, but just because the old owner's great. And I don't think he classes himself as a boomer, but it definitely is a boring business, right? The business that I bought, which was called Fifo Capital, it's not flashy. We had a filing cabinet.
Got it.
But it was a well-run, very good systems, just quietly under the radar business that had, in my opinion, heaps of upside and heaps of potential.
Right. It's pretty analog, right?
Yeah, pretty analog. And also the founder, he had a really good income to effort ratio, right? It was essentially an owner-operated business. He employed his brother as the credit manager. His wife is one of the BDMs, and he would come and go as he pleased, and made more than enough money to fund a lifestyle that was good. And so for him, it was the perfect small business. For me, though, I sort of went, I think there's a bigger opportunity here. I also was sort of thought, hey, everyone's going out and buying boring boomer businesses. And, through buying a steel windows business with my cousins, I'd seen how that's gone. A mate of mine bought an engineering firm. I saw how that's gone. I've got another friend who's always trying to buy these sort of businesses. And, and I think it's not anywhere near as easy as people think. People really think that, you just come in, kick out the old owner, digitalize it, and you roll them all up and you're a zillionaire. And I think the reality is a lot of people try and buy these businesses. And I think the key mistake they make is they buy businesses they're not skilled in. Right. So I was really lucky as a kind of learning that when we bought the steel windows business, shout out to Criddles, that I bought it with my cousin and with my uncle. And my cousin has been in the steel windows game for, 10 years plus. My uncle's also worked in the steel windows game. And if those two weren't at the factory 80 hours a week for the first 12 months, learning what actually happens and how to run this business, we would have been cooked, right? Yeah. And if I'd come in with my business skill set and gone, hey, I can improve this business and I can run it, we would have been bankrupt in the first 3 months, right? Like, it's just the reality of, yes, you might have some skills and yes, you might have done your MBA, but is it in this industry that you can actually jump in and save the day? So for me, seeing that, and then my mate bought this engineering firm and he's up to the third GM. I think it's starting to work now, but he's going to exit out of it. It's not what he wanted. And I think he's also gone through that learning experience as well, that next business he's going to buy, he needs to buy something where he can jump in and save the day.
Yeah.
And so for me, probably about this time last year, I got approached by the owner of the business. He's a friend of mine, actually through my gym. I met at the gym, chatted ever since, and that was probably 8, 9, 10 years ago. So we know each other quite well. And he just said, hey, listen, Simon, I'm thinking about selling my business. Would you be interested in buying it? It's a pretty nice McLaren, it's a pretty nice Ferrari, can't be going too bad, right? Yeah, signed an NDA and dug into the business. And I looked at it and I went, you know what, there's not everything I can do. I'm still under Australian trade from my last couple of exits. Right. But, I'm a finance guy, I'm in the business of building businesses and money. I'm not in construction. I'm not in manufacturing. I can't fix anything, that's just not who I am. So I kind of went, okay, I understand how the business works. And what I really got from the due diligence process was, it's probably running at 30 to 50% of capacity, right? It's in cruise mode. which is awesome. It's profitable at cruise mode. It's small, and it ticked quite a few boxes for me, which were, A, is it already profitable so we can just kind of continue to cruise if that's what we want? B, small payroll. One of my last companies, we had 120 on the payroll. It's just stuff that, can I travel a lot? Is it a business that I need to be there 40 hours a week, or is it a business that if I'm away for a week, everything still continues? One of the final things that made me really want to go for the business was, I said, so how many clients do we have? And they kind of looked around, I don't know, 40? And I'm used to having like 30,000 clients, 40,000 clients. And so like, you literally can know every client by name. And so for me, it just felt like, wow, if it's making this much money off that many clients and this many staff, there's got to be an opportunity here. But the real reason that to be fair, and I'm pretty open about this, I paid too much for the company, right? I valued it at X, I paid Y, but I was happy to pay a premium because I didn't want the experiences that my friends had gone through, or even that to some lesser description I'd been through, where buying this sort of boring business and not getting a very good handover. So for me, I knew paying the premium, I was going to be able to get, the full handover, no bad blood. And what I was also happy to pay over valuation for was reputation and track record. So, I've got a 20-year track record now. I've got a, very good reputation business. And that's actually allowed us to now, we're probably up 300%. And I think we'll finish the first 12 months up 400%. It won't keep going. It's just going from that 30, 50% of capacity up to 80, 90% of capacity, but it can't keep growing. But, that was the sort of, thing that made me go, oh, yeah, cool.
And so is that with those same clients, like just increasing the average revenue per client?
Nah, well, so that was the thing, right? So after exiting from the Aurora businesses, I got a big lump sum, and got a kicker a little bit later. And I did what kind of most people do. I went, what do I want to do next? What am I good at? Kind of go through that. And I put a bit of money into like residential property, commercial property, venture capital, a bit of private equity deals, managed funds. I had a pretty broad base of investments. But one of the asset classes I got into was what everyone calls private credit, right? And when I'd exited Aurora, one of the deals I did was I lent a Christchurch-based financial advice firm some money to acquire a client base from another advice firm. So out of everything I did, this deal probably took me 2 or 3 hours to do the due diligence on, set up, put in place. And then every first of the month, I got paid $23,000. Right. Just rolled it, 23 grand.
Yeah.
First month, check the bank account. Oh, cool, it's there. Second month, I think I might have looked. Third month, I didn't even bother. It was there. I had to do no maintenance, no calls, no nothing. And the borrower, the client, stoked. Making a lot of money off the deal, gone really well, wants to do more. Yeah. And I'm going, well, hang on, there's something here. Everything I'd done, nothing had made me anywhere near this sort of money. Yes. Nothing was this as easy. And easy is a relative word, obviously. But nothing, and I went, well, okay. If this now, I've turned it into something called client-based funding. So that's what the product is now called. But so I took this concept that I had in my head and then did with a client. And then I said to the owner of the business that I bought, which was called Fifo Capital, I said, hey, I've got this idea of what I'm doing over here. Could I bring that into the Fifo systems and basically use Fifo's balance sheet rather than my own personal balance sheet to pump out more of these loans? And the founder was like, mate, this is an excellent idea. Especially because, I've run a KiwiSaver firm, I run a financial advice firm. If anyone knows the value of these assets, it's me, right?
Yeah.
So I've got a lot more experience than, let's say, your average banker who goes and, you go and said, hey, can I have a loan to borrow against these assets? They can't assess it, right? Where I can look at it pretty quickly and go yay or nay. So he said, no, we can absolutely bring it in. And so 3 months after buying the business, on October the 1st, we launched client-based funding. And so that's now a really, really cool product. And the product market fit has been perfect. Half the growth in the business has just been introducing that product. So we've got clients who are very happy to use us. We've got more clients lined up. We've got a wait list of about 50 advice firms who would use us if we can find more transactions and more businesses or books to buy.
Yeah.
And we're sort of becoming the go-to private lender in the space for financial advice firms.
Yeah.
So that's been really cool. So my sort of calculations were, does my skill set transfer into this industry? I've never been in the lending space. I've never been, and as one of my friends / mentors says, you're not a credit guy, which I know I'm not, and it's okay. I've got the credit guy in the right seat, so I don't need to be the credit guy. But, coming into this new industry, are the skills sort of transferable? Because what I didn't want to be is driving to South Auckland, working in a factory, something I can't do, and just watching my investment crumble, right? Yeah. So at least here I can jump in and save the day.
Yes.
And, with any business, and this is the thing, so I showed up day one, first month, we had half our loan book payback, okay, which is bad.
Right.
As good as it is, yes, you want money back, but the reality is that halved the value of the business, halved our revenue, and our returns dropped to 4%.
Why did they pay back?
Bad luck, just timing. And I said to the old owner, well, so what's our pipeline like? What pipeline?
He's cruising.
He's like, if this happens, he doesn't care. It can just naturally grow back up. And I'm going, oh, crap.
I just paid for this.
And I paid top dollar too. And that's when, having a good network and having good people around you. So I literally just put out the call. There's a bit of a misconception that I'm a sales guy. I'm not. So the old founder's like, well, you can just become the sales guy. I'm like, it's really not me.
No.
I can do it very, very short term. And I understand the psychology behind it. But actually the mentality is just the opposite of me. But I have a mate, right, who is absolutely the gun at sales.
Really?
And just loves hunting deals. Right. So I did put a bit of an SOS call out. And I said, Mr. Davey, I need your help. And he said, what are you doing? How much you going to pay me? See you Monday. Cool. So phoned a friend. And then, first week hits the ground running. So what we do is we do essentially 4 things, right? So this client-based funding is the first thing, and that's the one that I've introduced, and that's one of our niche products. We also have a childcare funding product. So we fund childcare businesses, which is quite cool, and I'll go into that a little bit later because that's quite an interesting. I've never had anything to do with running a childcare business, but now I know how they work. But our second main product is obviously property financing, right? So if you're a business in the business of making money in property, we're a private lender. So if you've got a transaction you need funded,
yeah,
and the bank or whatever said no, or they don't understand the credit risk, then you come to guys like us because we're a lot more commercially minded and we make the rules on what we can fund and what we can't. Doesn't mean we have no rules, but it means that essentially between myself and my credit manager, if we think it's a good deal, we fund it.
Yeah.
Because it's essentially our own money, right? Which is great. So our, relationship manager, my mate came in, he just calls clients and go, how much money do you need and when? Give us the details and, we can pump out a loan the next day. And that's good. So we built back the book pretty quick, got the returns back up to our investors, back up to sort of 16, 17, 18%, which is where we like to sit. And, and the book's just grown and grown and grown and grown since.
So that's actually a good question. So fundamentally, the business works by you guys borrowing off investors.
Yeah, so we're funded from 2 ways. So we're a limited partnership rather than a PI fund. So we have what's called limited partners. It's essentially just wholesale investors,
right,
high net worth investors, who know what they're doing.
Yes.
They give us money, and then we also borrow money from an institutional investor. We mix that money together and then pump it out to clients.
Gotcha.
It's a very basic model, but it's it's just how private lending works.
And so is that funding at a fixed percentage return or a variable?
It's at a variable. Yeah. No, I don't think you could get a fixed. I mean, if you could, great, but it's all institutional funding is all based off the BKBM rate plus a margin, right? Which essentially is the OCR. It's a little bit different, but it's the 90-day bank bill rate.
Yeah.
So whatever that's doing, you add a margin on, that's what we're paying. We then top it up with our own money, and then that packages together, and then we go, yeah, you get $1, you get $1, you get $1. And hopefully we get that dollar back plus a little bit of interest.
So interesting.
So we're a mini bank.
Yeah, yeah. And so the investors, are they generally like what would be the range of their investment size-wise?
So as of today, our smallest investors got 1.25 million. The average is about 3 million. Yeah. So they're kind of generally retired businessmen or still running a business, but, you know, they've worked out property doesn't make much money. Their time horizon isn't forever. And from like an income producing fund, right? If you put us next to property, residential, commercial, we're about 3 times better returns, right? So, so we're kind of getting a lot of support there because, people are kind of getting to their 60s or 65 and going, this residential property is giving me a 2% yield.
Yeah.
I'll take 17, 18% over here because that's not 15% more. It's 700% more. And if you don't have a 20-year time horizon to wait for capital gains, you want cash now to enjoy life.
Totally.
So,
what's the minimum?
Yeah, good question. I mean, it's definitely a wholesale investor only. So probably 500K would take, but most of our limited partners want people to put in 7 figures or more. You know, we'd rather have a smaller partnership with more money.
Makes sense.
You know, and that was one of the risks when buying the businesses as well, because the limited partners, their funds aren't locked in. You know, they can. Yeah. So it's not a super liquid fund. The liquidity generally is 6 to 12 months. We can bring it forward if there's transactions or whatever, but generally we say it's going to be 6 to 12 months. So you've got to be comfortable with that liquidity. What we're trying to do is have less people around the table putting in more. And what I was going to say is that the risk for me when buying the business was these limited partners, they're not locked in, right? Other than 6 months. So I didn't know how they're going to take a new director of the business driving their money. But I'm very happy that all limited partners have put in more money since I've taken over. So that's woo. Yeah. Didn't want them to take it all out, and I was like, crap, my valuation's gone down and down and down and down. Yeah. So like I said, like we're not even 9 months in. But having the support from the limited partners has been great. We've been able to bring in new capital. And then the other way that this business is funded is you've got to be, you have a line of credit from an institutional investor. And so when I bought the business, one of the major banks gave us a $4 million credit line. They said, hey, it's $4 million. It's pretty cheap. You can do this with it, right? But banks hate finance companies, right? They just don't want to deal with them. And essentially a private lending or a private credit or second tier lender or whatever you want to call yourself, back in the day, we would have been called a finance company, right? And so the bank said, oh, hey, old owner, if anyone owns the business or more than 51% of it other than you, that would trigger a credit review of our facility. And doesn't matter who the new owner is, it would fail because we don't offer this. We've offered it once, 5 years ago, and we're not going to offer it to anyone else. So just warning, if you are selling the business, you might want to flag that, right? So that adds another risk to me. When I became the 100% shareholder, if I hadn't replaced that credit facility somewhere else, then again, our book would shrink by 33%. And that's the cheap money. The LP is the expensive money. We would have just, been toast.
Yes.
So I've got, we made a handshake agreement that's 12 months for me to find another institutional investor.
Right.
And just to put this in context, how hard this is, the old owner had been trying reasonably hard, but not like super, super hard, reasonably hard for a long time. And he's never got more than 4 million from a bank, right?
Yeah.
So I thought, how hard can it be? So I went to one bank, great idea, but sorry, another bank. Oh, we'd fund you, but not this business. And mixed messaging. Okay. And then luckily through a friend who works at Forsyth Bar, he said, go and talk to this guy, Will, at this business and, pitch him and see what he says. He might be able to help you.
Right.
And so, all right, here's my chance. And granted, I'm very, very new in the business. I understand it, but I'm not like entrenched in it.
Yeah.
And so I pitched to this guy and I said, hey, listen, would like some money. I'd like $5 million. It's more than 4, but if they gave us 4, I'd be happy. And anyhow, so I pitched it to him. I said, yeah, here we go. Like, what do you reckon? And he said, oh, cool business, but not for us. But why don't you talk to Paul? Paul? Who's Paul? Oh, that Paul. Oh, I actually know Paul. Okay, so that's all right then. So I won't use his name because I don't know. I haven't asked if it's okay to be public information. But anyhow, so Paul runs a large private credit business. Paul's a rock star in New Zealand, right? He was top dog in the UK. He's the ultimate debt fund manager. Like, he's here, everyone else in New Zealand's down here. Right. He won't tell you that, but that's the truth, right? And so anyhow, his wife's from Moscow. My wife grew up in Moscow. He's just built a nice house in Queenstown. We're building a house in Wanaka. And my old previous company, we were actually the first institutional investor to go into his fund about 5 years ago. And my old business partner, who's a very, very good chief investment officer, had grilled this guy and said, yeah, he's the best in New Zealand, like case per mile, like we'll absolutely trust him with money. So I knew him a little bit, and then like we'd caught up down south, and I hadn't even thought of him. And then I just rang him out of the blue and I said, hey, Paul, I bought this new company. Would you be interested in potentially funding us? He goes, I'm in Auckland next week. Let's catch up. Comes to our office, has a notepad, takes like 1,000 notes. And at the end of it, it goes, oh, yes, some leaks here. Sounds interesting. We'll flick you an NDA and then we'll go from there. Cool. All right. So I'm like, all right, we're 6 weeks into our into the new business, trying to find this new facility, and nothing happens. Week goes by, another week goes by, and then on the third week, I was like, should I text them? So on the Thursday, I literally just sent him a text saying like, hey, Paul, just checking if you were going to send through that NDA. And then he goes, oh, sorry, mate, I've just been absolutely flat out. NDA is attached, like, it will send me the email. And so we executed on the Friday the next day, and Tuesday the following week, there's a term sheet for $10 million. And I'm like, oh, that's cool. So within the first 90 days of being part of the business, we'd gone from a $4 million credit facility to a $10 million credit facility, and they've given us another $10 million, and I think they'll give us more.
Really?
Well, why wouldn't they? We've got a 20-year track record. We've got great products, great people, great credit history. There's not many businesses out there.
So is he a bank?
He's a credit fund. So he is like a bank. He lends businesses money. Right. But he's not a bank. Yeah. So private credit essentially sits outside the bank. They generally lend money to businesses that, for whatever reason, because banks have just been getting more and more conservative over the last however many years, right? So now, unless you fit exactly into this box, you might not be able to get the funding you're looking for. Like in our case, right? We're a good business. We don't lose money. We only make money. We've got heaps of equity in the business to, it's a very safe bet. But it's bank policy. Oh, we don't fund these sorts of businesses. Right. Not that it's not a good business. So guys like Paul come along and go, well, all right, we've got money. We're funded through investors as well. Right. We can do the DD, definitely better than a banker, and go, yep, we'll lend you some money.
At a pretty low rate.
Yeah, at a fairly low rate. Yeah, I mean, nothing's cheaper than a bank, right? But to be fair, our weighted cost of capital came down, and what we're able to do in terms of, it's now our decision within parameters. Our parameters are here, not here like they were, which meant we've been able to improve our property financing product. We've been able to introduce client-based funding. We've been able to scale up the team a little bit, So all these things that we've been able to do, we couldn't have done under a bank relationship.
Yeah.
So that's been New Zealand has a deployment issue at the moment, right? There's too much money in New Zealand, and people don't realize that. You watch the news and you think everything's horrible. Well, thanks to the government doing a really good job and bringing in this AIP investor scheme, there's over $2 billion of committed capital to New Zealand right now that doesn't have a home.
Yeah, right.
So when I show up and say, hey, I need a little, they go, yep. Because, you've got to find something that's a good enough deal for your investors, but for some reason isn't quite bank friendly. And you've got to find that margin in between where we sit in a 5 million population country. It's not always easy to place that money.
Yeah, right.
But it does mean now that there's a ton of money to fund New Zealand businesses.
That's cool.
Which we didn't have before.
Yeah.
So well done. Really but now, you go, all these new funds are now popping up, right? But the reality is, I think last time I heard there was 70 or 80 AIP investor funds that are now approved. 65-ish of them, probably you wouldn't put your own money in.
Right.
And so the top 2 or 3 or 4 are getting the majority of the money.
Right.
And now they're going, crap, we've got all this money. We need to find more deals to put out there. Yeah. So,
interesting.
So that's what I always say. There's sort of 3 reasons why I was able to do this. One was I bought a business with a very good track record, and it continues to have that, right? And that knowledge and that systems and those processes are still there, and that's our rock. The second thing was timing. Timing is really good at the moment. I'm sure 2, 3, 4, 5 years ago, I wouldn't have had such a good response. And obviously the third thing is a personal relationship, right? If you've got a really good reputation and you know each other, it's a lot safer to do a deal than who's this new guy over there. So we kind of ticked 3 boxes, and that's what made it happen, which is great.
And when did you roll out the rebrand?
So, well, as of recording this day, in 10 days, we're rolling it out. So
10 days. So today.
Yeah, today. Yeah. So hopefully today. Yeah.
The shirt's on.
Yeah, the shirt's on. So, yeah, I mean, the company was called Fifo Capital. Now, depending on your generation, if you say Fifo to my dad, he goes, oh, first in, first out.
Right, yes.
Right? You say it to someone our age, they said fly in, fly out, because to the mines or whatever.
Yeah.
And I mean, first in, first out was because we were originally like an invoice factoring, like a business, invoice finance and all that. So first in, first out, made sense. The name's not horrible. I gave the name a 7 out of 10. It could be better, it could be worse. But, you know, our 30, 40 clients don't care what our name is. They want to make sure that, you know,
Product's good,
and we fund them when they need it, and they pay us back when we need it. Like, that's the relationship, right?
Yes.
Because we've pivoted from a small owner-operated business in this sort of space. Now we're a, you know, what I'm calling a private lending firm. Like, we're a boutique private lender. You come to us when you've got a good commercial transaction and you need someone to look at it with a commercial lens to fund it in a, you know, I say we're paid to solve problems, right?
Yes.
That's how we are from a credit point of view. And so, yeah, so we wanted to find a name that kind of, you know, looking forward, what is the business actually? You know, we're not a business-to-business finance company technically anymore. We are a private lender. And I wanted to brand the business into being a brand and not just something that FIFO could mean anything and capital could mean anything. So, yeah, so maybe now I can run you through how I kind of came up with the name, right? And, you know, naming a business is really hard. You can have an awesome business with a crap name. Like, that happens all the time. But also sometimes people spend way too long on having the perfect name, but then they have the crap business behind it, right? So you got to get the balance right.
Yes.
But the challenge I set for myself was, how do I name something that's a one-word name? I didn't want something financial, something capital, right?
Yeah.
To be honest, A, I've done that already. And B, it's the easier way to get an all right name. But if you want to build a brand, you've got to just have the one word. So I needed one word. I needed it to not be taken, which is another very challenge.
Yeah.
The trademark needed to be available. The .co.nz needed to be available, right? And then I needed one word that when you think of that word, you think of money, right? Yep. Finance, money, credit, debt, whatever you want to call it, right? So I had to think of like, what's one word that reminds you of money? Nothing else is called that. And then in my old businesses, right? So when I chose to call Aurora, and I used the name too many times, and I admit that, in hindsight, I would have changed the name of one or two of the companies. But the reason why the name Aurora worked really well was A, it's familiar. You've heard of the word Aurora, right? It's easy enough to spell. It's familiar. You can remember it. We'd often, when we first called the business, when we rebranded that to Aurora, we tell people, oh, we're from Aurora. And they're, oh, I've heard of you. No, you haven't.
No, you haven't.
But you've heard the word Aurora. Yeah. We'll take it, we'll take it. So, and the other thing that worked really well for the name Aurora, which I wanted to kind of reuse that way of thinking, was Aurora was actually an inside joke, right? The real reason why we called it Aurora was this joke. And so when I tell you it's called Aurora, you go, oh, that's cool. But when I tell my dad and my brother I'm calling the business Aurora, they both looked at me and went like, because of Wayne's World? You know the movie Wayne's World?
Yeah.
Yeah, so Wayne's World is like my favorite movie growing up, right? And in Wayne's World, right, it's the opening line of the movie is like, I live in Aurora, Illinois, which is a suburb of Chicago. Excellent. Like, and like the whole movie is about how they want to get a better job and get ahead in life so they don't have to move back to Aurora.
Right.
Back living with their parents sort of thing. So like Aurora to them is like living back at home So that's why for me it was funny. So you meet all these people and they think it's some serious name with some like, nice sort of meaning and all that. No. It's just Wayne's World.
That's funny.
So so then I was like, how does lightning strike twice? That's the second thing. And like we had all these names and we did what most people do, go to ChatGPT and say, I like this and I like this and I like this. And then you get all these kind of funny sounding names and, that don't mean anything.
They spelt wrong.
But anyhow, you get a lot of junk and it's really hard to then find the right name. And, like naming your child, right? You also don't want to tell everyone your name until it's named, because if you tell your friends, oh, I'm going to name my daughter so-and-so, or I'm going to name my son so-and-so, everyone's got an opinion, right? And at the end of the day, it's not their child, so they don't get a say, right? So with naming the business, what I wanted to do was, have something that had an inside joke that if you knew about it, you were like, oh, that's hilarious. Yeah. If you know, you know. If you hear the word, it's sort of familiar and you can probably spell it. If you hear the word, the brand, it's probably got something to do with money. And then if you know a little bit about me, right? My sort of goals in business was like, I wanted to set up a financial advice business. Tick, done that. Built, scaled, exit. I wanted to set up a tech business. Built, scaled, exit. That was my mortgage software business.
Oh, yeah.
Done. I wanted to set up an asset management business, which is the KiwiSaver. Built, scaled, sold. Last thing on my list was to do a bank, right? Some sort of bank. Now, these days, banks are boring, too much regulation, way too high a cost for entry. Digital bank, I'm about 10 years too late. Wise, Revolut, they won that, game. So I was kind of going, but, the last thing on my list is something like that, right? And because my whole dream growing up was to work for a Swiss bank, right? That was what I wanted to do. I thought that would be the life. And because I don't have a Swiss passport, I can't speak German very well. It never happened, right? But then I was like, well, this next business, we are essentially like a bank. We're not a bank, but we're like a bank. We lend businesses money so they can grow, they can make money themselves.
Yes.
And the world goes round. And so I went, all right. I was actually I was reading a book with my son, right? So my son's 7, and his favorite book at the moment is Asterix and Obelix. Do you know Asterix and Obelix? Yeah. And so we're reading, and it's the Asterix and Obelix go to Switzerland. And so Asterix and Obelix are being chased by the Romans, right? And they're in Geneva, and they need somewhere safe to hide. And so they run to the bank, and it's the Bank de Genève, it's the Bank of Geneva, and this Swiss banker comes out, and his name is Zurix. And Zurix is the banker who goes, all right, I'm going to hide you in the safe. But this guy is like the epitome of a Swiss banker. He is absolutely super, super concerned about the reputation of the bank, the security of the bank's reputation, the security of the client's money, and, nothing else annoys him other than knowing that the bank's reputation is perfect, the client's fund is taken care of, and it's a private, situation. So it was like an ancient version of a Swiss private bank, right? So I was like, that's it. That's the name. Because Zurix, is obviously Zurich is the home of money. Yes. I used to live in Zurich when I was younger, so it's my second hometown, right? Yeah. But having a little edge to it with the IX, having the character, and knowing that it's the Swiss banker from the Asterix and Obelix things, I was like, what a cool name.
It all checks out.
So and it was hilarious. So the next morning, I'm just Googling Zurix. What is there? What's out there? Can I get this? And my son's just like, why are you so obsessed with the Zurix guy? He was more interested in the other characters and the rest of the story. And I'm like, mate, this is it. This is the name. Yeah. And so got the .co.nz, got the trademark, got all that. And so 1st of April, we rebranded to Zurix.
Very cool. And what's the meaning behind the imagery?
Wow. So it's a good question. Yeah, we've got the ibex here. Little story behind that. When I was 25, so I'm a good skier, right? You're a good skier too. We should go skiing sometime. So pretty much skiing kind of got boring, right? Because everywhere around the world you can ski from a lift. I've skied and done and isn't challenging. So I wanted to get into mountaineering. so I could get to more gnarly lines and do cooler skiing, right?
Yeah.
So I signed up to a mountaineering course. And so I was in Chamonix in France, and you do a 7-day course. You climb a 4,000 meter peak in Italy, and then you climb Mont Blanc, which is the highest in Western Europe.
Wow.
Yeah, so you're in this group and you show up and you learn how to use crampons and ice axes and all that, and you get a guide. And I had this classic French guide, and I think he forgot my name, right? Because he just started referring to me as Young Ibex. So he's like, Young Ibex, come here. And like, Young Ibex, do this. And I'm like, you should just ask what's my name, and I tell him, I wouldn't be offended. But anyhow, so the kind of like the nickname sort of stuck, right? And so, yeah, just through calling it Zurix, we needed some imagery, and we thought, well, what's, the solid, reliable, the grandfather of the Alps. You're not going to push an Ibex down a mountain, right?
No,
they are
no.
very sure-footed, right? So we just wanted to blend that into it, and yeah, have a bit of fun with it. So it's not too serious, but that's what we are. So Zurix is us.
It's on.
Yeah, let's see.
How good. I like that. Color's nice. Looks good. Looks real good.
Yeah, it's hard to, like I said, it's really difficult to rebrand a business. And is there a better name out there? Probably. Is there a better whatever? But like, it would take us 5 years to find it. Sometimes you just got to make a decision and go for it.
This is why I reused Alt.
Yeah, but don't use it too many times. I made that mistake with Aurora. I used Aurora too many times, and then it actually became a bad thing because you're like, actually, this business has nothing to do with this business.
Confusion, yeah.
But people go, but they're both called Aurora. I'm like, oh, one's called Aurora something and one's called Aurora something. It's like, yeah, okay, I shouldn't have done that.
So what are you looking like operationally at the moment? Headcount, offices, what do you got going on?
Well, the beautiful thing about this business is the money does the heavy lifting, not people. It's not a bums on seats model. In fact, I actually make less money the more people we have,
Yeah, makes sense.
within reason. Obviously, there's ratios and stuff. So as of today, we're a team of 6. Which is perfect. It was a team of 3 when I took the business on. We've doubled that. I think we can double again from today, and we won't need any more people. So for the foreseeable future, we've got no openings. We have no plans for bringing on more people.
Yep.
Obviously, you never know. Someone might go or whatever, but so far, everyone's really enjoying it. So far, all the staff are loving it.
Yeah.
The couple of hires we've made just blended in really well and doing better than expected.
Yeah.
So, so no, it's not a large operation from that, but I love that, right? But,
Absolutely.
I mean, payroll goes out of your bank account and you're like, was that today or yesterday or when was that? Like, you don't notice it. It's not this punch in the guts.
Yeah, I love that. So what's the plan? Is it to scale and then exit, or?
Nah, so this is cool. Like, this is the cool thing about it is, so I've done that. I've done the, start, scale, exit. This is I wanted to have the challenge of not just founding something, but buying something with a long track record and then seeing if I can improve it or not. So that was one. The second thing is, it's not a business that's really, yes, the enterprise value is higher now and will be higher, but if you sold Zurix, right? Let's say I pick a number into your bank account, you're going to go, well, I need Zurix back to manage my money.
Exactly.
So there's no real point in selling it. Now, obviously, someone writes you a crazy check, you take it, but this is a much more longer term horizon. So yeah, I've done the start, scale, exit a few times. What I wanted to do was, can I build an intergenerational company? Something that, my kids, if they need it, they can come work in the business or whatever. Now, whether that happens or not, it's irrelevant. But what it does is it puts me into the, for the strategy calls or the investment within the business calls. Where do we put our money? Where do we put our time? What decisions do we make? I can go, well, I've got a 30-year time horizon. Therefore, I can make decisions like this. Where in my past, it's like, who's paying me? When are they paying me? Why are they paying me? And what can I do to make it higher?
Yeah.
Then that decision is completely different.
Different mindset.
So it's kind of trying to, I'm just trying to learn a new skill going, hey, in this scenario, how would I treat it? Because I don't need to do the same thing for the 4th time.
Yeah, cool. So I guess one goal is to continually increase that institutional money available.
Yeah. So the type of business, that's a good question. There's a sweet spot for this style of business, right? At the end of the day, New Zealand's 5 million people, and there's only so many deals that a private lender like Zurix can do, right? So we can't keep scaling. If we were to keep scaling, we'd have to change the type of business we are. We'd have to change the sort of transactions we do, all right? And we'd have to change everything. where what we're doing right now is we've got our own niche, our own little sweet spot. And right now we get very good risk-adjusted returns to our investors, right? We have a very good income to lifestyle balance. And my forecast sort of says that, I think we'll end up being somewhere between a 50 and 100 mil book. That's like where I think is our sweet spot. It was 10 mil when I bought the company. It's 30 mil now. Be 40 mil in the next month or so. So once we hit 50, I said to the team, we're going to go to Fiji. We're going to have a week off. We're going to get there and we're going to go, is this the right size? And we just stay around this and just kind of, manage that.
Manage it, yeah.
Just spin that book. Yeah, exactly. Or is there a little bit more growth that we should go? Because, I'm just trying to find that sweet spot. For me, it doesn't actually make any real difference if it's 50, 75 or 100 mil, as long as we find the sweet spot, because the sweet spots will be the returns are the best.
Yes.
And therefore the returns actually are what make us the most money, not just scale. Because if we scale and go past that sweet spot, we'll turn over more, but our returns will go lower, which means actually our profit will go down.
Exactly.
And I don't, revenue for, what do they say? Revenue for vanity, profit for sanity. So, but again, that would become a different style of private lender or finance company, right? So that wouldn't be Zurix. And I've got no interest. PE firm came to me like, oh, let's scale it up to $1 billion. And I'm like, let's not. Like, that sounds like, It's like
the Mexican fishing story, right?
Tell me about the Mexican. No, I've been to Mexico, but I haven't been fishing.
I'm sure I'm going to butcher this, but essentially a Wall Street banker is in Mexico, wants to go fishing, goes out fishing with a Mexican fisherman. Banker dude's like, oh, like you could scale this, let's increase operational efficiency, let's market, blah, blah, blah. Mexican fisherman's like, why?
Yeah.
And the guy's like, oh, so like you can, build it, scale it, exit, and then you can retire and go fishing.
Yeah, I get it. You didn't butcher it. That's a good one. Yeah.
It's a good like reminder though.
Sometimes, yeah. And like I'm constantly having to remind myself, like, this isn't your typical sort of early stage venture investment. This is a long-term, multi-generational. Again, this isn't trying to make decisions today to pump the EV sooner or in the future. It's how do we make it, just run efficiently, profitable, good returns, and enjoyable. So
I like it.
So that's why the first goal was get to 50. Then we'll sit back, go to Fiji. The staff, we can go.
Yeah, Red says.
Where are we at?
So when will that be, do you think? Later in the year?
Wow. So I bought into the company in July. And I took full control in October. So somewhere between July and October.
Yeah. Is the old owner involved at all currently, or?
He's a limited partner, so he's still an investor. So he still has a bit of his money in the fund, which is great.
That's kind of cool, right?
Yeah, and we work out of his office.
Yeah, right.
Yeah.
Okay, so into the building.
Yeah.
Gotcha.
So if we need him, he's sort of right there.
Oh, that's cool.
So sorry to kind of cut you off there.
No, that's cool.
Yeah, and having his knowledge around, and again, that's the difference between just giving. If you come into buying a business, right? And if someone really has this fixated cost, like it's worth X, and I'm only going to take X. And again, it's pretty hard to negotiate someone down who doesn't need your money, who's making money, and is quite he's quite happy to sit there and still earn money.
Not a lot of leverage.
You've got no leverage, right? No. But if you're going, but I can see the opportunity in my hands, and it's worth hopefully one day more in my hands than that figure. Then it's about sitting like, how do you, if you give them what they want, you've just got to make sure you get what you want. And for me, it was that really good handover. I know at any time we can still go and say left or right, up or down. What would you do here? What do we need here? And that's better than the founder you screwed down. And then, as soon as they got the cash, it's adios.
Horrible transition. Everyone's losing.
Yeah.
No good. What would be the split with the loan book between, say, like ECE, the client-based stuff, and property? Like, is it third?
Nah. So property is probably 50% of the book. Again, a $4 million transaction is nothing, right? Like, that's dime a dozen. They happen all the time. Client-based funding, our average loan size is between 1 and 2 mil. But again, there's just not the transactional volume like there is in property. So it's probably going to be 20, 25, maximum 30% of our book.
Yeah.
So, if property's 50, 60, client base is 25, 30, and then the last two products, which is the ECE, and we still do invoice financing, is that sort of 5 to 10%.
What's the usual setup in invoice based factoring?
Yeah, you give us an invoice, and we pay you generally 90 or 92% of it up front.
Wow.
It's great for tradies and stuff. People, if you're dealing with like big, reputable companies, but they have your 90-day payment terms, but you've got, and I noticed actually this grinds my gears in Christchurch, man. Every tradesman down here sends you an invoice and wants it paid the next day. Where, you know, like a good quality business sends you an invoice and it's not due for over a month, right? So
depends on the industry and plans, and it is interesting.
Yeah. Well, I mean, it's just the hand to mouth that certain businesses are, right? Yeah. But yeah, so if you're a plumber and you've done a big development project for Fletcher's say, hey, we'll pay you in 90 days, you know, 100 grand. You can come to us and we'll give you $92,000 today, and then we collect 100 from them.
What's the default rate on that?
Oh, it's not high. Yeah, I mean, A, Fletcher's have agreed to pay us. They're a pretty good debtor. B, you're not let off the hook either. And we generally, you know, we obviously make sure that we're dealing with the good businesses in trade. And yeah, you've also got another invoice to Fulton Hogan, or you got another invoice to Christchurch City Council, whatever. I don't know who. So we just replace the invoice if for some reason they don't pay.
Yeah. With that type of transaction, is it usually a recurring pattern, or is it usually one-offs?
It actually does become often recurring. Like at the moment, we've got some real estate clients. They've sold down developments on behalf of developers, but the developers don't have the cash to pay them until titles are issued.
Right.
So you might have sold a section in Queenstown or a house off the plans, and you're not getting paid for 9 months, where we'll pay you up front now and then just get paid later. So, and then once you kind of get used to that cash flow, you come back for more. But often it can be one time as well. Yeah. It's just a one-off. Getting caught in a rut.
I like what you said about problem solving with money.
Yes.
It's cool.
Yeah.
Very cool.
For me, I love it because it's transactional, it's doing deals, and and it's fun.
It's like you said at the very beginning when you funded that book, right?
Yeah.
You had the recurring payment coming in every month, rain or shine, low effort, low energy.
Yeah.
Good return.
Yeah.
It just makes me think about business and about ways of making money. And I've done 1 or 2 deals of that nature, right?
Yeah.
And yes, it's just a good time, isn't it?
Yeah.
Yeah.
Yeah. I mean, there's obviously risks, and you've got to really know what you're funding. You want to have it set up really well. You want cheap cost of capital to make sure that it's profitable, you know, rain or shine. But yeah, I mean, for me, it's just felt good, and it's been exciting to do. So I want to continue to do that and get Zurix to its sort of optimum size, and then we'll see. Like, it doesn't have to be anything more than that.
So with what's on my mind right this second, I've got this situation where I've quite enjoyed doing a few of these ad hoc deals, right? Mm-hmm. Lending money, whether it's for a business problem or a property fund, problem of some sort, right? Mm-hmm. Insane returns, right? Not very scalable, semi-risky.
Yeah.
I also have a network of people that have money on hand. They've either exited or they've got 50k, 100k, 200k just sort of sitting around, right?
Yeah.
I think some people freeze, right? Mm-hmm. They don't know where to put the money in, so they just let it sit in the account making 1-2%.
Yeah.
Which is crazy.
Yeah.
But yet I also empathize.
Yeah.
Because it's just hard to know, right?
Yeah. I mean, my sort of thinking around how to create wealth and like my sort of plan has changed, right? You know, like for me, I was sort of talking to you before this, like I'm selling all my residential properties I can, right? Like it's just, I've been in the property game for, I don't know, 10, 15 years.
Mm-hmm.
I've made like a rounding error, like it's nothing.
And you've realized it's not for you.
It's just crap returns. You don't make much money. You get property managers going, hey, so-and-so's broken this. Do you need that done?
Yeah.
Hey,
no, it's not for me.
Your tenants have yelled at the neighbours. What do you want me to do about this? Yeah.
People love it.
I just think the returns don't stack. No. Yeah. I mean, you could argue that being a developer, right? But then but every IRD liquidation you see as a property developer, you know, it's very easy to get caught short. And often these property developers, they don't have the income behind them to bail themselves out. Like, you know, even with me, I was like, if I hadn't had a good income in the background through these property stuff, and I've always put good deposits, got good houses, like good areas. I mean, you just get bills that are like huge. And if I was cash flow negative or cash flow neutral, even cash flow positive, even if it was $100 or $200 positive a week, it wouldn't even cover half the bills, of the unexpected bills, obviously, So it's kind of like, hey, yes, you've turned 500 grand into 800 grand over a long period, but it's like, but also my value of the money is eroded. So it actually hasn't got me ahead at all. And then you look at it going, okay, even if I pay this off over 20, 25 years, I'm earning $600 or $700 a week on now $1 million asset. And it's like, that's a horrible, it's 2-3% return. Why would I do that? But, but again, some people are good with houses. They can add value, they can build, they can develop, they can do that, right? And that's cool. Great, come to us when you need financing. Me, money's my thing, so we're just going to stick to that. And yeah, I've got opportunities now being a wholesale investor that you don't have as a retail investor. So, I didn't have a Zurix where I could, become a limited partner in the business, put my own money into the business, leverage my own money, and then lend it out and have control, right? And because obviously I'm the GP of the business, the general partner, and the major LP. So, I get to clip both sides of the ticket.
That's cool.
Which is great. And that's, I couldn't have done that starting out or, just being a usual employee or something. I wouldn't have the means. But, with selling some businesses, you can get yourself to that next stage. And that's when, so I'm completely changing around my asset allocation of what I've got, where I'm putting it, thinking of managed funds now more as my bank account, right? To diversify away from Zurix. But again, it's all just sort of pieces of the puzzle. I only use property now as to get cheap leverage, to get cheap debt. I don't buy property for any form of income or any form of capital gains. If I get capital gains, great, but it's just not even factored in. I don't even factor in the income from it because I leverage it to put it into the fund, to put it out. So yeah, it's a change in my way of thinking.
What do you mean by that? So you can buy a property, then pull the money back out?
Yeah, so all the property I own, even once I sell down the rental properties, is all A+ prime property, right? Like Wanaka, Westmere, and Walker Street, Christchurch, right? So it's all 3 Ws. And that is easy to lend against, right? It will go up because it's, there's never a slowdown at the top end of the market. But what I do is just use that as cheap funding to get, which I can then put into my limited partnership and then lend out at a high rate.
Right.
And so I can take that that arbitrage. Yeah, exactly. So, but I would, if I couldn't lend against it cheaply, so if I had to use debt to buy it, well, that's completely irrelevant. I would never do that. And I mean, don't get me wrong. I've got family members who 25 years ago, they bought a house or two and that funds their retirement now. Great.
That's cool.
It's awesome. Do that. I'm all for that. But for me, in terms of making money and generating wealth and generating freedom, that's, yes, good freedom for way down the track, but it doesn't really make sense now. So I use the assets as security to access cheap capital from the banks to then put into things that produce a lot more of a return, and then I take that margin. So that's the only reason why I've kept property, which is, A+ grade, good areas, safe as houses, as they say. But I don't do it to try and, you see these property coaches out there hacking cash flow, and I'm like, what a crock of shit. It's just, often it's just misleading banks as well. And going, I bought something in New Plymouth and some slumlord to get a 7% return. And I'm like, gross return. Once they trash the place, they move out. And then what? You're going to go live there? No, you're not.
It's the Kiwi way, though, isn't it?
And then selling it. I mean, selling property costs you $50,000. Fees, marketing, staging. What did I pay you for? 50 grand?
I know.
Put up a Trade Me ad? But that's the thing. 50 grand. And then you're like, oh, actually, hang on. It's not so good. So what's next for you, though? Talking about me way too much.
Good question, Simon.
Yeah.
It was August.
Yeah.
After Momentum.
Yeah.
That was when we last caught up. Yeah, I mean, since then, the business has been pretty stable. I wouldn't say stagnant, but just incremental growth.
The events or the coaching or
Coaching really quite static. Similar number of clients. The Altitude Collective has, I guess, launched. That's probably the biggest thing that's changed. So that's grown somewhat to around 20-ish members as of recording. So that's really cool. Really good group of people. A mix of older, younger. Some are at the end of the sort of journey, the career. And that's really cool. Like to see those people interact with the younger ones. The energy's really good. The events have been cool. So that's my interest to scale that. Somewhat, not infinitely, but like it's got some potential. It's got some growth available.
Cool.
More events within New Zealand. Did the Sydney one earlier in January. That was cool. So.
And that guy was a good speaker. The
Frank Grief, he was great. He was full on. He was intense, as you'd imagine. He just wanted to provide value. And I think that's what I've noticed with entrepreneurs. Right? They're generally very similar. Depending on where they are on the journey, they're the same person. They just might have more progress, I guess. The personalities are very similar.
I don't think you change just because you're further down your journey. Right?
I don't think so.
You are.
Exactly. Like I just finished the Lululemon Origin book recently. With Chip Wilson. And just reading that book, I just related to a lot of what he's saying, the mindset and the interest, right? Like he may have a ginormous net wealth, but he's the same dude, right? He's the same entrepreneur that, you or I are, I feel, right? And so.
I don't know Lululemon though. That would be another level.
Another level, but he's got problems, and he's got issues, and he's got the balance of wanting to be creative and to create and to build something, but then like having bureaucracy hamstring him, right? And then like you hear the media and like just crucifying him over one thing he said, right?
It's funny though, right? The term I heard recently was the success tax. Have you heard about that?
No.
It's a version of the tall poppy syndrome. Right? They're saying in New Zealand, and this is one of the problems, is like, if you become successful or show it or whatever, you'll have to pay a success tax, And that tax is like, your opinion doesn't count anymore because you don't have problems, or your opinion doesn't count anymore because, you drive a sort of, you're doing slightly better than someone perceives that they are doing or whatever. And that was an interesting concept, right? Because that's something that I'm conscious of and try to control that narrative because it's real, right? And nobody likes paying excess tax.
It's really interesting, actually, isn't it? Do you feel that there's do you feel like no one's immune to it either?
Good question. There's some people that everyone just still loves no matter how successful they are.
Branson.
Exactly. Richard Branson, someone like that. So there are a few exceptions. But most people, again, it's more New Zealand centric, right? It's more of that middle level.
You just wonder, like, the Icarus sort of story or theory, like, you just wonder if like there is a cat where you will get cancelled or something bad will happen.
I
don't know.
That doesn't keep me up at night, but it's interesting. But I don't know, for me, I want to see New Zealand do better, right? And I want to see, New Zealand's got some issues. And actually, I'm going to be on another podcast soon as well, where we're going to kind of break down how do we make New Zealand economy a rock star economy again, because it's not going to be politicians who solve this problem, right? It's going to be business owners who create jobs, who create products, who create services, invent things. That's what brings good people to the country. That's what brings good jobs to the country. That's what brings prosperity to the country. It's not some bullshit policy in the background that milks it from one to the other. That's how we go backwards real quick. And, New Zealand's lost its sort of number 8 wire philosophy. Like, it's very rare that you meet someone, you're like, you've still got it.
You've got it.
Yeah. I don't have it. I wish I had it. Maybe I have it in a financial sense, but I don't have it. But I love when I meet people like that.
It's a good chat, right? It's a good chat around the economy and around how, it doesn't really help just circling around the money, right? Like, no, we've got to get money in from somewhere.
We've got to create things.
We've got to create stuff.
It's
bullshit.
Yeah. And get $1 stronger, so not everything's so expensive. But
I wonder yeah, I guess it's like any change, it's just like one step at a time. And change begins with a single action, right?
Yeah.
Yeah.
Creates momentum. Yeah.
Yeah.
There we go.
From here.
Yeah. Are you going to do Momentum 2.0?
To be determined.
To be determined.
Sure.
Yeah.
Maybe. It was, the thing I struggle with is that I'm not shy of ideas and trying things, but that definitely comes at a cost.
You really? Like
Meaning like
financial cost or?
just being scattered, right?
Yeah.
Just being diluted.
Yeah.
Yeah. So I guess to answer your question, I think for the rest of the year, it looks like, growing the Altitude Collective.
Yeah.
I'm looking to launch an online group coaching offering.
Okay, cool.
Would have unlimited size.
Yeah.
So I've been toying with that for a while.
Yeah, cool.
And I don't really see a downside. I've been looking at other, I guess not competitors, but other people out there doing that.
Yeah.
So yeah, it's good reference points to follow, not having to recreate the wheel.
Oh, well, next time when we catch up, you can tell me about all that stuff, and yeah. So,
Sure.
oh, shall we crack on?
Let's do it.
Yeah.
Thanks for coming in. You got
Thank you for having me.
a golf tournament?
I've got a golf tournament to get to. That's why I've got the polo shirt on, ready to go.
Yeah.
I will have to chuck some shorts on, but yeah, hopefully it'll be a nice sunny day. Maybe, yes, maybe not.
Yeah, slightly.
But no, just again, thanks for having me on here.
I appreciate the time.
And again, if anyone's listening and wants to chat, I'm on LinkedIn, big on LinkedIn.
Yeah, cool.
By the time you see this, Zurix.co.nz.
Zurix.
Zurix.co.nz. If you're in the property game, looking for financing,
That's cool.
client-based funding, hit me up. Within reason, even if you just want to have general chats, yeah, I'm always keen to help people and,
And with investment, roughly over $1 million.
Yeah, I mean, if you've got $500,000 and you've got more coming, yep, and you're a wholesale investor, definitely. Yeah, like I said, we're a pretty small group of high net worth guys who more of us are just putting more of our own money in.
Yes.
But because the growth is going quite quick, we would definitely like to chat to a couple people and we can send them a perspective and I can meet up with them.
Awesome. Yeah. All right. Well, I can't wait for the next one. Fiji probably will have happened by then.
I hope. Yeah, if Fiji hasn't happened, then I need to get back to work.
I just love this whole thing, right? Like 2 years ago, I think we did the first one. And so just tracking the journey, right?
Yeah.
Yeah. So
Cool.
stay tuned for the next one.
Thanks so much. All right. Cheers, David. Thank you.